Hello and welcome. In this lecture video, I am on page 1 of your course pack, Chapter 1 Notes. Okay, so the beginning of accounting. So let's talk about, in this lecture video, what is accounting, some users of accounting, and then some career options in accounting. And then we'll also do a few quick check problems just to make sure we understand who are the users of accounting and what accounting is all about, okay? So as we see right over here, I have a pretty good explanation for it. And so accounting is a measurement system that helps us to identify, record, and communicate transactions, okay? Transactions about an organization's business activity. And we need to communicate that to important users of financial information. And that information that we communicate has to be relevant. Otherwise, people don't care about it. It has to be reliable. Otherwise, we can't trust it. And it also has to be comparable. Okay, so that means it would be easier for us to compare the financial performance of one organization against another. If we're thinking about, well, should we buy stock in company A or stock in company B? If they're using completely different accounting standards, then it makes it really hard for us to compare those two because they're not on the same format. They're not on the same wavelength. We can't compare them. So another important thing about accounting is that we have to provide comparable information. So let's parse this. It says right over here, we identify, record, and communicate. Okay, so identifying business activities. And so that's a big thing about accounting, is that we're going to be keeping track of an organization's key business activities. So for example, Mary Washington enrolls students, or a student, let's say, for example, that would be one transaction, and we would have to record that. Another transaction would be that a student pays tuition. How do we record that a student pays tuition? We have to keep track of that, and we have to record that, and we have to identify that. So in terms of identifying business activities, we're going to have some business transactions. We have to select those that would be relevant to an organization. So here, Apple sells an iPhone. That is a transaction that is relevant to Apple. Just like if a student pays tuition to Mary Washington, that is a transaction that is certainly relevant to Mary Washington, and we would need to keep track of that. So part of accounting helps us to select those transactions that are relevant, okay? And also to record those business activities. And so that's a big thing right over here. Recording and communicating are really big aspects of accounting, especially financial accounting, which is what Accounting 101 focuses on, okay? So we're talking about keeping a chronological log of transactions measured in dollars. So if we think about a student pays tuition to Mary Washington, we need to keep track of, well, what date did they pay it? How much did they pay? Right? And so when we think about the chronological log, we want to know the date on which they paid it. And then we would need to say, well, how much did they pay, so we can track that in terms of dollars. So they paid us $4,000. And so when we record that, we also have to think about, well, how does that affect the organization? Well, let's think about that. When a student pays tuition to Mary Washington is getting extra cash. It's like a friend paid you for something that you sold them. It's the same idea. You get cash. Mary Washington also gets cash. Okay? So Mary Washington gets cash, and then they record that as a sale. So they said, we made a sale. So in terms of recording that, Mary Washington would say, well, okay, we got cash, and then we made a sale. So we would have to think about how we would record that in our books for Mary Washington. And I'm trying not to use certain terms such as the general ledger and accounting equation, which we will talk about soon. If you've had accounting in high school, some of that may make sense, but right now it may not make too much sense because we haven't talked about it, okay? So for now, what I want you to understand is that we will be recording that chronologically, okay? And then we also have to prepare accounting reports. And this is the communicating of our business activities. So for example, we would say, here's how much cash we have at Mary Washington. Here is the value of our land. Okay. Here is the cost of some buildings that we purchased, or we purchased a new truck, and here's the cost of that truck. And we put that up on something called the balance sheet. What we would also want to communicate through our income statement is we would say, here's how much tuition revenue we had, and then here's how much we had in expenses. We had to pay, for example, we had to pay our faculty and staff to deliver courses. We would have to show that and communicate that to important users of our financial information. So another thing is communicating those business activities, okay? And I do say right over here, record keeping is an important aspect of accounting. And that involves the idea of record keeping involves recording those business activities. That's what that focuses on. So recording of the business activities is record keeping, but that is not all of accounting, but that is an important aspect, but accounting is much broader than that. Okay. So when we talk about who uses accounting information, who would care about how much tuition revenue Mary Washington has, and how much did we pay for faculty and staff salaries? How much do we pay for supplies? Those kinds of things. Who would care about that? Well, we have users outside the organization, external users, and then we have internal users. So when we're talking about users outside the organization, we could talk about regulators. We could talk about shareholders. So if we're a publicly traded company such as Apple, we need to report, here's how much we had in total iPhone sales, but then here's how much we had to pay for all of our employees' expenses. And then we subtract the two. And I'm grossly oversimplifying this right now just for the context of our first page notes. We would have net income. When we take all of our revenues less our expenses, we have income. And then we would want to report, well, here's how much we have in total revenues. Here's how much we had in total expenses. Here's our income. We would want to report that to shareholders, people who own stock in our company, because then they want to know, well, should I sell the stock or should I buy more stock? Okay. Also, equity analysts, equity analysts give buy, hold, sell recommendations on stocks. Also, suppliers and customers. Those are some other important external users, folks not inside the company, but outside the company, external users who would care about any kind of accounting information that the organization has. But we also have internal users. And so when we think about Mary Washington, how much tuition revenue does Mary Washington have, for example? You'd want to say, well, we have our director of accounting and financial analysis at Mary Washington. That's something that he or she would really want to make sure that they know, okay? Because they're keeping track of that. And while Mary Washington is not out to make a profit, we need to generate enough revenue to cover our expenses. Otherwise, we have to borrow money or cut expenses, okay? So we have internal users and then external users. Another fundamental concept in accounting, which we'll talk more about in Chapter 8, deals with internal controls. So internal controls are procedures, processes, and technologies, are a combination of all those that help us to make sure that our financial statements, that what we say we had for revenue, that what we communicate, this is our revenue number, right? This is how much we had in sales. This is how much we had in expenses, that those numbers are correct. Okay, reliable accounting reports. That's one objective of an internal control. Another objective of an internal control is to make sure that we're efficient and effective, and that we also comply with company policies. So some examples of internal controls would be a password, independent reviews, audits, separation of duties. Another example of an internal control would be that if I want to present a paper at a conference, another job of a professor is to write papers and present those at conferences. If I want to go to a conference to present my paper, I can't just go and then submit the bill to Mary Washington later, because lots of times Mary Washington covers those costs. I can't just do that. What I have to do is go to my manager and say, I would like to go to this conference. Here's how much I think it's going to cost. I also have to get 3 price quotes for airfare. And then the manager would review this, and then he or she would sign off on that and authorize that. That is an internal control to make sure that the faculty member is using the cash of the university properly. Okay? So that's making sure that I adhere to company policies. That's promoting efficiency to make sure that think about those 3 quotes for airfare. That's making sure that we are being efficient with our cash. And then also that we're setting up reliable accounting reports. Okay, so authorization would be another example of an internal control. When we talk about financial versus managerial accounting, we have this figure right over here. Financial accounting, which is what Accounting 101 is focused on, deals with providing external users with financial statements. Accounting 102 deals more with managerial accounting. Managerial accounting is focused more on providing information for internal decision makers. Okay? Now, accounting has 4 broad career opportunity areas: financial accounting, managerial, taxation, and then accounting related. Currently, accounting students get jobs. We accounting students that graduate from Mary Washington and pretty much other universities as well, they all get good jobs. Okay. And so they fall into a couple different areas. Financial accounting. And so in financial accounting, we're talking about public accounting. So we might be talking about auditing. Okay. For example, working for the Securities and Exchange Commission would be another example of financial accounting in a regulatory capacity. We also have managerial accounting, and so we're talking about managerial accounting. For example, you could be a budget analyst, you could be an internal auditor, you could be a controller, a treasurer. With taxation, we're also talking about public accounting, and so we're talking about working for a public accounting firm and doing taxes for individuals and for corporations. Okay, also potentially working for the IRS. When we talk about accounting related, we're talking about, for example, consultants. So you could be an IT, information technology consultant with a strong background in accounting, and you could install accounting related systems. So enterprise resource package software such as SAP or Oracle Financials, those require folks that understand both accounting and finance. Okay. Some other examples that we have over here, business valuation, forensic accounting, that's a big growing area in accounting. Okay. Also litigation support or becoming an entrepreneur. We look at this figure, we can see that the majority of accountants work for businesses. Most are in private accounting. Some also work for government or not-for-profit organizations or for educational organizations. And then some also work in public accounting. From what I've seen from a lot of students is that they'll start off in public accounting and then they move over to private accounting. So examples of public accounting would be working for Deloitte or Ernst & Young, PricewaterhouseCoopers. Okay, those are examples of large public accounting firms. Grant Thornton is another one. And so a lot of students start off in public accounting and then they move into private accounting to become a controller, for example. And then maybe from the controller, they'll eventually move up to becoming a chief financial officer. So key takeaway message is there's a lot of opportunities if you major in accounting. Okay? A lot of opportunities if you major in accounting. So let's look at these quick check problems. So what I want you to do is to pause the lecture video and work on these 2 quick check problems, which is on page 4, and then we'll check it together, okay? Hello and welcome back. So the first one is accounting is an information measurement system that does all of these. These are from the definition, but it does use technology. And then the next one, external users of accounting information include shareholders, yes, customers, yes, regulators, and creditors, purchasing managers would be internal to the organization. Thank you.